Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for December 13th of 2020. We'll be going through our regular agenda, look at the prior week's results, our currency strength meter, fundamental announcements scheduled for this week, and it is a very busy week. A look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with the ledgers, of a drawdown on the long-term account as a few pound trades closed against late last week when the pound collapsed. On the open of the market today, however, the pound gapped about 150 pips up from where it had ended on Friday. So we've already recovered the bulk of that and potentially moving on to higher gains this week. So stay tuned for that. Again, the long-term account will be vulnerable to swings as trades open and close since we're going for bigger wins, and that implies bigger risk at the same time. The intermediate term ledger is a couple of points down again on the same pound trades that closed, and same message. We did get gapped up on open trades as the market opened this week, and we pretty much back on an even keel from where we were at the end of last week, and presumably on to bigger and better if the pound continues to perform. On the short-term ledger, we had a spectacular week. We were up 13+% on four trades, really three that were the winners. Well, really two were the big winners. The other two were, even though one was a loss, pretty close to break even. But we did have a huge gain on the pound dollar that represents the bulk of the gain. Pretty much 90% of the gain is on that pound dollar trade that gave us 267 weighted pips in a couple of days. So that was a very impressive move that the pound did at the beginning of the week. Of course, it did end up collapsing towards the end, but short-term account, we do trail or adjust stops consistently. So we took the bulk of the profit when the pound started moving in the opposite direction. Notes and opportunities for improvement. Of course, as I mentioned, there was a massive pound collapse on Brexit fears late last week, and it does seem to be undoing that as the new week begins. The USD is still at multi-year lows. We've got 3 weeks to a hard Brexit. We're going to have to call it that at this point since they don't seem to be any closer to an agreement than they've been in the past few months. They are still at the negotiations table, still trying to iron out a deal, but they are being, I guess, difficult on a few sticking points there, which make the likelihood of some sort of deal in the next couple of weeks unlikely, not impossible, but certainly it's an uphill battle. This is an interest rate decision week on multiple currencies: the pound, the yen, the dollar, the Swiss franc. So we've got at least 4 interest rate decisions coming up. So promises to be a busy week on the fundamental trading. Commodities such as oil, silver, and gold do continue to outperform the rest of the market, and presumably will continue to do so as people start looking at these as hedges. It's turning out to be a very unusual December, as I've been pointing out. Usually December is a completely dead market. Right now, we've got so many things going on as the year wraps up. The US election outcome, the Brexit, whether deal or no deal, and of course the COVID pandemic and the vaccines that are coming out. So everything is making December, this December, be a very active trading month, the likes we haven't seen in, well, I don't remember when I've ever seen a very active December. Relative strength meter for week and the past month. If I may direct your attention to the rightmost columns, and let's focus on the weekly, we can see that silver is up almost 6% for the month and gold up 3.5%. As I mentioned, commodities are shining right now on the general fears about the economics and the geopolitical issues happening right now. USD Swiss is down about 2%, which means the Swiss is gaining on the dollar by 2%. As I mentioned, the dollar is at multi-year lows right now. USD CAD also almost 2% gain on the Canadian on the dollar for the month. We've got the Aussie JPY, and indeed, all the Aussie pairs are looking very good right now, with gains as high as 2.66%. In the case of the Aussie dollar, that's the Australian getting stronger and the dollar getting weaker at the same time. So it makes sense that that would be the pair that moved the most. But Aussie JPY is also right up there at 2.36%. Aussie New Zealand 1.5. So the Australian dollar is looking very good. If we look at the pound pairs, they're not so evenly represented. They're pretty close to break even for the month, and this is because the pound was doing pretty good for the first week of the month, and then we had that collapse last week. So turned out to be a wash. It went up one week, went down the next. So for the month, it is pretty much very close to break even. The euro has been doing well, not as well as these other currencies I've mentioned, but still doing pretty well. And the other big mover has been the Kiwi dollar, which the Kiwi made significant gains against the dollar. It did do a bit of a retrace last week, but that is normal. That is the dollar pair that had moved the most. So it makes sense that it would do a little bit of a retrace as people or traders, well, traders are people, I guess, as traders take profit and get out of these, unwind these trades, especially a lot of traders try to get out of the market before end of year. So we're going to have that happening at the same time. Fundamental announcements for the week. As I mentioned, quite a busy week. We've got the employment rate out of the UK early Tuesday morning. We've got the US interest rate decision on Wednesday. We've got the employment change out of Australia also on Wednesday. Swiss interest rate decision early Thursday morning, followed by the Bank of England's interest rate decision later on that same morning. And in the evening, same day, Thursday, we do have the Bank of Japan's interest rate decision. So we've got 6 tradable events here that we probably will be trading all of them. Some of the scheduling, especially like the Swiss interest rate decision, 3:30 a.m. is a little bit outside my current hours. I change hours routinely depending what the market is doing. And the Swiss tend not to mess with the interest rate decision too much or too often. So I might pass on that one, but we'll see. I will be sending out a schedule for my subscribers, and well, we'll see which ones will be traded live. But at this point, assume that all of them will be. Moving on to the charts, and we saw silver and gold before. This is oil, and we can see that it is making higher highs consistently every week. Has been doing that since it bottomed out in sometime in November. So we've got quite a few weeks of those zigzags, higher highs, higher lows, and it finally broke out of the sideways channel. It had been trapped underneath $45 since it got close to that back in May, and it's finally breaking out towards 50 for the first time since March of this year, when the whole COVID pandemic and oil crash happened. So we're starting to get very near to pre-COVID levels of price, and there is a lot of uncertainty still in the market, but it is curious to see how oil is overperforming despite the fact that oil consumption is still at record lows. Somebody knows something I don't know. That's pretty obvious. Moving on to the currencies, the euro dollar, as I mentioned, and this is going to be the case for pretty much every dollar pair. The one exception is probably the USD Jpy, and we'll discuss that when we get to that chart. But euro dollar did break out of all previous highs. It's in uncharted territory from a couple of years back. We would have to zoom out to a weekly chart to see higher highs. They're there. But this is definitely multi-year highs at this point. We have a confirmed breakout. It is following a trend line, and well, we'll have to see if it continues in that direction. We've been trading it pretty safely, as we have been all the dollar pairs, since we know they're subject to deep or potentially deep retracements at any given time. So we've been locking in profit as often as we can. Pound dollar, it did a breakout, so it definitely gave us a higher high a week or two back. And then, of course, we had that pound collapse last week. So it's back near the support level of the trend line, also support level at the top of the Ichimoku cloud. I suspect, and I've said this before, that the pound has a lot more upside than downside right now. So definitely keep an eye on the pound pairs for opportunity to trade them up. And as I mentioned earlier, when the market opened at 5 p.m. US Eastern time today, the pound pairs gapped by 150 to 200 pips. So they started higher by at least 1.5 to 2 cents than where they closed at Friday. That's a huge gap. You usually don't see gaps like that unless something actually happened over the weekend, an upset election or something like that. In this case, nothing has happened. Simply, I guess the market decided, and I share that opinion, that the jitters and the drop last week was a little bit excessive. So that's what happened there. USD Jpy, as I mentioned, this is one of the few exceptions, if not the only one, on the dollar pairs where it is not at the extreme top or extreme bottom, depending on which way it's trading. So we have a bottom that was established back in February of this year at the 101 level, and it is currently trading at 104. So it's 400 pips above the lowest level of dollar weakness, yen strength that we've seen in the last year. I think that's a great opportunity, assuming the dollar continues to drop. And again, my target for the USD JPY has been and remains around the 100 yen per dollar level. So that's 400 pips there to be had if that continues to play out. USD Canadian is at the bottom of the chart. Indeed, gave us a lower low this past week and finally broke out of even that level. It did a bit of a retrace on Friday, but it is still looking extremely bearish and indeed will be one of the key pairs to be traded if we continue driving into dollar weakness. USD Swiss, yet another breakout in uncharted territory, multi-year low. There are lower lows on the USD Swiss, but we have to go back years, a decade, to find a lower low on the USD Swiss. So I would call it a definitely uncharted territory. And if we continue to see the dollar weakness, we may indeed be revisiting those previous lows from the early 2000s. 2008 debacle and stuff like that. So another of the key pairs to be watching as we trade the dollar in either direction. If we do see a dollar recovery, all of these pairs that are now at the extreme bottom or high, depending which way they trade, are going to be slingshotting in the opposite direction. So the opportunities are there across the board. This is definitely a great time to be trading. Aussie dollar breakout. The pattern is clear. We've got breakouts on all the dollar pairs except for the USD JPY. Aussie dollar, no exception. It keeps on making higher highs. We've been taking profit judiciously on Aussie dollar trades for weeks now, and well, we'll continue to do that. Kiwi dollar, same thing. We've got the higher highs and breakout even from those previous levels. So we're consistently getting higher highs pretty much every week. Aussie Canadian at the top. This is one chart that is overextended. While I do think that there are valid reasons for the Australian dollar to be in a position of strength right now, there are no equivalent reasons for the CAD to be in a position of weakness. So very likely, we're going to see a correction on the Aussie CAD towards at least the middle of the chart, perhaps even the bottom, before all is said and done. That doesn't mean it's not going to break out. It could very well continue going up, but I think there's a limit to how far it can do that. Euro Swiss, we've been ignoring, and I may even remove it altogether from the deck. It's just not doing anything tradable. It's slingshotting the in both directions. The range it's in is maybe 200 pips, so there's not enough there to justify a risk reward scenario. So I'll probably keep it on till the end of the year, but it's going to be retired for a while. I'm sure we'll be back to trading the Euro Swiss. I routinely swap out pairs that aren't performing for ones that are. So I think the Euro Swiss, its time for a while now is done. Euro pound went back to the top of its sideways range again on pound weakness this past week, and very likely will give us opportunities in the opposite direction. The problem with the euro pound is that both currencies are vulnerable to Brexit and both vulnerable to the upside and the downside. So even if we have a bad or a good Brexit, this pair might continue to be sideways. However, the range it's trading in, about 3 to 400 pips, is still good enough for sideways trading. So we'll continue to look at opportunities from the euro pound. Euro JPY, another one at the top of the chart where I don't think it has much reason to remain there, much less to do a breakout. So with the Euro JPY, I already am looking for opportunities to trade it down if it breaks support. So we have pending orders in place to take us in short if we have a support break. While it might very well continue to go higher, I just don't see a valid reason for it to do that. Euro Canadian, very sideways and uninteresting. If we get a break of support, and it's been at support for quite a while, get a break of support that might change. I might want to trade it down to the 150 level, and that's 4 to 500 pips right there. But while it doesn't break that level of support, we can safely ignore it. Pound JPY was going up very nicely, and we grabbed some good profit. And last week we gave some of that profit back as it collapsed on Thursday, Friday. That being said, as I mentioned, the pound did gap up, and we've been making a good chunk of that back, if not all of it. So stay tuned. I'm sure the pound is going to give us great opportunities, just not sure in which direction as this week begins. Aussie JPY, another one at the top of the chart where I don't understand why it should be there or why it should stay there for too long. So this is another chart where I'm looking for opportunities to trade it down, and the opportunities on this one are huge. We're talking 1,500 plus pips there on a trip to the bottom. So this one is going to be a good performer at some point. The problem is we don't know when that's going to happen. But when we do get a break and a correction, this one is going to give us huge opportunities for gain. Euro New Zealand broke the bottom of the chart, kept going, did a bit of a retrace to test resistance, and seems to be popping back down. We were trading this one. I think we got taken out at break even on one of the retrace. Well, a small bit of profit, but close to break even. So we'll look for another opportunity to trade it. This one moves in very, very big spurts. So it's always a pair I like to trade, but at the same time, the risk is higher because of the same thing. It does move in big spurts, so it could move in either direction. So this has to be traded very carefully. But once you grab a good trend on this one, it is a big money maker. Pound Canadian, this one we did enter a trade immediately on Friday after collapsing because it was so near the bottom, and that trade is already carrying some profit. So we'll let that continue to evolve. I think there's a pretty good chance that the pound, especially against the CAD, will recover at least to the 170 level, which already is enough profit to make it worth our while. If it goes deeper, well, that's even more. Pound Swiss, same thing, went to a previous level of support, a complete collapse of the pound against the Swiss. Below that level of support is pretty much uncharted territory. We have some lows from back in March when the market was in a panic over COVID. Right now, I don't see it going back to those levels. So another one with a great opportunity to trade up. And last but not least, pound Aussie went all the way to the bottom of the chart in 2 days on that pound collapse. And this was one of the bigger gappers as the week began. And we already are taking profit on trading it back up, and that profit has been protected. So there's only upside to those trades at this point. That is the end of the charts. We'll be looking heavily into trading both the pound and the dollar as the week begins. Setups we see in progress. The pound pairs, of course, we've got the Brexit deadline at the end of the year. Obviously, a decision, an agreement could be announced much sooner. I don't think it's going to happen, but it could be announced at any point, even right now. But the deadline is the end of the year. And of course, we do have an interest rate decision coming out of Bank of England this week. The dollar pairs, the U.S. election fallout, massive USD weakness in the market right now, and an interest rate decision out of the Fed for the week. The New Zealand pairs, the one thing you can say about New Zealand is that it's breaking out against the dollar, and it's one of the bigger movers. So we always look for the ones moving the most to give us the most bang for our buck. So we'll continue looking very carefully at the Kiwi dollar. And we'll look at a couple of other things like Euro New Zealand, but I think our trading with the Kiwi is going to be really those pairs, Kiwi dollar, Euro New Zealand. The Swiss pairs, the Swiss is breaking out against the dollar, and they also have an interest rate decision this week. And the Euro pairs, of course, are breaking out against the dollar as well. That's where we are with the setups we see in progress. There's a lot of tradable stuff out there, but we can't trade everything. We have to focus on whatever we think is going to give us the best opportunities. And I think right now those are definitely the pound pairs and the dollar pairs. And a few words in conclusion before we end this session. This is definitely the weirdest end of year market I have seen ever. The opportunities and risk in the market, and I think I've been saying that for this entire session, are not only highly unusual at this weird end of the year, but they're also fantastic for trading. There's a very good chance that the bulk of your yearly profit might be made in the next 3 weeks. So not the time to be taking off, though. Normally at this time of year we do shut down trading, but this December is definitely a tradable event. So we'll be playing that by ear. If we see that the market at some point goes dead, of course we will stop. But as long as it's moving the way it's been moving, we'll continue to see what we can squeeze out of it. So are you ready for that trading, guys? And that is the end of my session. And I'll be posting this as an update, of course, very shortly. Do I have any comments or questions from anyone before we drop off? Okay, folks, then thank you very much. We'll be back tomorrow. Stay tuned for that email with the schedule for those of you subscribing, and I'll talk to you then. Have a great rest of a weekend.